How can the person listening right now position themselves wisely to get into good situations when buying a home? Because we want their home to be a blessing and not a burden. So what type of work should they be doing to, once they sit down with you or someone local, that they are in a position of strength when it comes time for them to look for a home to buy?
The reality is, if you want to purchase a home, the biggest struggle that I see is that I think people sometimes just wake up one day and say, I want to buy a home, right? And then they call a realtor and the realtor sends them to a loan officer. And there should be a little more planning around that, right? When you decide, like when I decided to purchase a home, I started putting up a certain percentage of my money, right? Because I wanted to come in with a down payment, right? I think I probably put down 10% on my first purchase. And not only that, I was dumping money into my 401k. So a lot of people don't know, right? Their 401k, we can use that as assets. So if a client decides today, hey, I think I want to buy a home, and they give it a time frame and to get themselves in order, they can utilize a 401k, and that 401k may be matched by an employer. So at the end of 6 months, at the end of 12 months, instead of only having 3,000 in the bank, you can almost have maybe 12, 13, 14 in a 401k, right? And that shows you as a much stronger buyer. And you're not necessarily required to kind of, take on gifts and things of that nature to buy a home. Because if you take gifts, and it's perfectly okay, gifts should be funds that are literally given that you don't have to pay back. But if that's not the scenario, you can find yourself in a bind if you take money from relatives and you may have to give it back and things like that. And you come up with your down payment, you come up with your closing costs, and everything looks great. And then if for some reason you have to kind of give some funds back, they can kind of put you in a bind. So we like people to be financially ready. If we do down payment assistance, nothing's wrong with that. We got programs that can give you all the way up to $10,000, but you typically have to have at least a 640 credit score. So I tell that person when they first come to us today, if for some reason they're a 630, maybe don't rush to purchase, right? Let's take maybe 30 days, maybe 60 days to get that credit in order. At the same time, start saving a little money, because we can make you a much stronger buyer by going through the right steps. So credit scores, to tell you the truth, they can range from different models. Will tell you maybe from 350 to 820, 850. I've seen some 810, some 820s. Haven't seen higher than that. But I mean, I've seen credit scores down to 400, right? 410, 420. And the same way it takes a lot of work to have an 800 credit score, it actually takes the same amount of effort to have a low credit score, if that makes sense, right? That's not paying things on time. That's kind of neglecting, your credit. And, if you consistently do that, you're going to have low scores. But FHA actually has a minimum credit score. Take that back. Their minimum credit score is really like a 500. Most lenders will at least go to a 580. Some other lenders probably will max maybe 620 or something like that with their FHA loans. But a 580 will get you in, will get you into a home. Conventional, there's a requirement of at least a 620 credit score. Okay.
Now, what's the difference there between those two phrases, FHA, conventional, for those who don't know?
So conventional is typically going to be Freddie or Fannie, right? It's still a qualified mortgage, meaning it's a residential mortgage. We still actually have to look at credit scores and follow their guidelines. And those loans are sold on the secondary market. FHA, it used to be a thing where FHA, that's HUD, right? And HUD used to be federally insured, where maybe FHA or the conventional products were not. Really, they're all kind of federally insured now. So just the difference realistically is just kind of in guidelines and how they're structured. FHA was typically for the homeowner who easier underwriting, lower credit scores. First-time home buying is typically going to be structured for FHA. Mm-hmm. Okay.
And now you said that 580 can get you into certain products, 620 can get you into a certain products. What is the score that could get you like the ideal rate, not just kind of getting in the door, but like what puts me in the upper echelon as far as a potential client of yours?
So if you walk into a bank and you see that interest rate right now, which could be maybe a 3.5%, I'm just kind of throwing a number out there, and that could be doable today. That's typically if you're going to be like a 620 credit score, a 720 credit score or higher. Okay. So if you're somewhere around a 660, that's going to put you about mid-range, which can still give you a very decent credit interest rate. But if you want the best rate, you want to be pushing 700s.